Earlier this week, the Center Square publisher Chris Krug and PhD economist Orphe Divounguy, they discussed some areas of the country where housing prices are so high that even a starter home, that's right, your first home, is costing $1 million.
Today we're talking about the $1 million starter home spreading across the country. It's mostly on the coast, but why renting just got a little bit more affordable and in a matter of measured years. Hey, Dr. O, there's a record 242 cities across the United States now that have a typical starting home that's worth $1 million or more. That's nearly triple the pre-pandemic count. Meanwhile, renting just hit its most affordable level in years for a median household income. And let's just start simple with this. You know, when Zillow says starter home, what do they actually mean? And this is coming from your reporting at Zillow. By the way, you had a chance to talk with CBS about this over the last week, and I enjoyed watching that interview. But when you're talking about a starter home, what do they mean? And what does it tell us that there are now 242 cities across the United States where a starter home is $1 million?
Yeah, the bottom rung of the housing ladder now costs $1 million in a record 242 cities. And it's not just the coast, like you said earlier. Unfortunately,
it's mostly the coasts that are jamming that number up, right?
Yeah, it is. It is. You know, it's the New York, New Jersey, California, many California markets, Washington, some in Florida. But yeah, let's start with the basics. What do we mean by starter home? It's defined as a home in the lowest third of home values in a given region. So you look at the distribution of home values in each region, and in some markets, the typical home value in that lowest third is at least $1 million. And I think that's crazy. That's crazy. And
big number.
And it's, you know, like I said, it's not just the coast, right? It's, you know, there are some in Wyoming. There are some in Illinois, in your home state of Illinois. Mm-hmm. There are some in Texas, right? Before the pandemic, it was Colorado. You had like Denver, I think, area.
Well, you say in that interview, I mean, there are now 26 states. And the fastest growth is, you know, of these homes is New York and New Jersey. But what changed to push the $1 million? I think everybody's kind of like, okay, yeah, you know, if you want to live, you know, like somewhere big or on the coast, it's going to cost you $1 million, and that seems ridiculous, but it's understandable. But there's 26 states now where this is the case, and what was it that caused this push to the inland states?
Yeah, I mean, the first thing is the pandemic surge in home buying caused by low mortgage rates, plus the fact that people had been delaying moving for a while, right? Caused prices to increase very rapidly. And that price increase caused housing to get unaffordable very quickly on the coast first. And then you had this movement during the pandemic inward, and a bunch of markets inland started also to see rents and prices rise very rapidly.
So what are some of the cities that are on your list? What, you know, when you look at these 242 markets, I mean, it's not just all the you know, the coastal points that would be familiar to people, or outside of metro markets where we're like, okay, I get it. Like, where do you think it's the most surprising?
Yeah, I think some of the Midwest markets would be surprising to me, but even Texas markets are surprising to me, right? And then you look at kind of the number of millionaires that go and move to those areas, and you realize that there is a big inflow of wealth in some Texas markets. Mm-hmm. That would, of course, push prices up, if not met by a surge in housing supply, right? Mm-hmm. And so now, of course, the good news is that a lot of markets in Texas have actually built a lot of housing over the past few years, and that has helped to tame price and rent growth. So that's the good news. But yeah, I mean, this is still kind of let me put it this way. Hopefully, that growth is going to slow down significantly now because of the inflow of supply that we got in Texas, right? But there are markets that just don't build enough housing at all, right? You look at markets in New York and New Jersey, those are markets, there's so many cities in those areas that just don't build housing. Why? Because they're too restrictive in terms of land use restrictions and building codes that builders just would prefer not to even bother. Yeah. If a builder is going to go on and take the cost, right? The cost of delays, the cost of all of the restrictions that are put on how to build and where to build and how to build, then they would have to pass that cost on to consumers. And there probably wouldn't be a lot of consumers in the current environment where interest rates are 6.6% or 6.5%, whatever they are today, to go ahead and pay for that house, right? And so in some of these markets, builders are just just not participating.
Right.
And in some of those markets, they're just not even allowed to build, period.
Right. Yeah,
right?
Yeah.
You look at Suffolk County, Long Island, and Nassau County, Long Island, the restrictions are so tough that, the typical home in that market is old, very old.
Yeah.
Builders are just can't go in there and build any housing because, the home that they're going to build is going to be very expensive.
Right.
Which is why, the starter home in some of those markets is over $1 million. Unfortunately, it's not just the Hamptons anymore. It's Nassau County, Long Island. It's parts of New Jersey. It goes all around the New York metro area. It's just so unaffordable. Then you got a couple of markets. You got Wyoming, right? You got some of those markets near these beautiful places with great mountain views, these beautiful parks in Wyoming and Montana, where basically, you can't get a starter home for under $1 million.
Right.
So yeah, it's unbelievable what's happened in the past few years, and it's spreading around the country. But hopefully, in the markets where you've seen a big surge in housing supply, we're not going to see that number continue to increase that rapidly.
Well, and you'd referenced that rents, however, are kind of like becoming more affordable, and in some of these same markets. So, I mean, can you make sense of that for us?
Yeah, and so I wouldn't call it affordable. I would call it a slowdown in rent growth. The fact that rent growth has slowed is a combination of higher supply. Okay. For in Texas and being one of the markets, or Florida, right, in the places that have built housing during the pandemic, and so that I think that's the good news, right? Is that some of those places that have built a lot of housing where prices had risen a lot, builders came in to fill the gaps, right, the big deficits. But in some markets that just haven't built, you're really not seeing that adjustment. Right. And you look at Chicago, for example. Chicago has some of the fastest rent growth in the country. You look at New York markets, rents are still rising very rapidly relative to everywhere else. And so that's unfortunate. I think keeping housing more affordable for more people means building housing. How do we build more housing? Well, we make it easier for builders to build. We lower their cost. We don't increase them. And unfortunately, a lot of local governments have not gotten the memo and have continued to make it very difficult for builders to build housing. Now, the good news is that even the federal government's getting involved. Everybody's talking about housing affordability, and more jurisdictions are starting to say, hey, we got to do something about this.
Yeah. Well, thanks as always, Dr. O. Make sure you read Orphe's Everyday Economics columns Mondays in the Center Square and across the Center Square Newswire.